Hey guys, welcome to Hope It Helps. And my guest on the show today is Miss Sophia Bhatti. Did I say that right?
You did,
Yes,
yes.
I did. Awesome. Sophia, welcome to the show.
Oh, thank you. Thanks for having me.
It's a pleasure. Really excited to speak to you. And for the people who don't know, me and you connected through LinkedIn. And it's so funny that I was actually speaking to a friend recently, and I'm like, the next guest I want to have on the podcast is someone in the investment field, because it's something I've been thinking about. And I think, especially now, given everything that's happened, having someone on the show that has the kind of experience that you have would be super useful, not just to myself, but to, I think, a lot of people. So I'm really excited to speak to you. But for the people who don't know, before we get into all the nitty-gritty details of that, why don't you give all of us just a little background about yourself, and we'll take it from there.
Sure. So I've been in financial advisory and wealth management for over 15 years now. I started at university. I did a master's in finance and investment. And then from there on, I've just had my foot in financial services ever since. I've worked for some of the top international banks. Spent most of my time in London and then moved across to the UAE. And I've just been in the same profession, but I love it. I have a strong passion for it, so yeah.
Yeah. And have you always been passionate about like finance from when you're younger, or how did you like kind of fall into it?
Yeah, good question. No, so I actually enjoyed economics, which kind of got me into university. So my degree was in economics.
Okay.
I started with that, and and then slowly I started to get more interested in the wealth side and investments. And part of my degree was a little bit about investments and things like that. And then I wanted to do further studies in that. So I did, as I say, a master's in investment. I just enjoy it. And I think if you do it right, you can help people substantially as well. So, it's a win-win.
Yeah, for sure. It's so funny because my background at university was also finance and economics. And after university, I was looking for a job, and all my friends would tell me who were in the finance world, they're like, Khaled, this is not for you. Like your character, your stuff, like don't do this. This is not what you're gonna like to do. In the end, I never entered the field. I liked finance because growing up, I'm like, okay, business just happens. I didn't know what that meant. But then getting into finance, what I liked about it is that you really understand how does business work, how to like thinking of investments and so on. So I really like that. But economics is where I'm like, I did it, but I'm like, this is not my thing. It's just, I just couldn't connect the two. It was too macro. It was too macro for me. I like the financial side that was more tangible.
Yeah.
So like you said, you worked for the big banks. I think you covered most of them. You did Barclays, HSBC, Lloyd's. So I think you've covered your bases pretty well.
True.
So when it comes to investment and like wealth management, is there a standard like formula or like a rule of thumb that everyone should follow, or is it very dependent on person to person? Could you walk us through like what's the psychology behind that?
Yeah. So definitely it varies, and the reason being there's a couple of factors that affect one's investment appetite, if you like, and it depends really on risk. One of the things is how much risk are you willing to take, and as the more risk you can take, the returns can be higher, but then also you can make higher losses. So
Exactly.
that is quite interesting, and lower risk, obviously lower returns, but then so risk is a massive factor. Also the time. So are you looking for a short-term investment? Are you looking for much longer term? Are you looking for retirement type of plans which are really long-term? And therefore, again, the sort of investments that you look at differ depending on the time. Is it short, medium, long, for example? So that's another factor. And with that, obviously, age, experience as well. If it's a first time you're going into investing, maybe start somewhere a little bit, not cautious, but, not go all in and put all your money into something that's really volatile. So again, all these things really help one, but you need to kind of look at all of these factors when you're looking to invest. Really, it's really key. I think that they're the main sort of points to consider.
So you've mentioned risk, time, and your age or your experience. Those are the three main factors that are going to play into that. Now, on the risk aspect, because I think risk typically, if correct me if I'm wrong, is more of a character kind of thing. You know, as your personality, are you more of a risk taker, or do you like things a bit more, you know, like safe, as you said? Because, and is it short term versus long term too? Now, I think a lot of the time, and correct me if I'm wrong, people like that short term. You know, they want that quick return, they want that quick thing, but usually that is quite risky. And what I've learned from like the research I've done is that typically the most successful people are the ones that go for more long term. You know, I don't want to make let's say I double my profit in like 1 month, 2 months, but I can like 6-7 times my profit in like 3 years. So a lot of people, you want this because like you know, it's that instant validation, you get what you want, but typically research shows that the longer term is what is usually most effective. What would you think? Does that hold true, or how do you go about that?
Yeah, it does. So you're exactly right. The longer term, I mean, and all studies, and if we look at like the equity market, for example, stocks and shares, you know, if you look at the way the trends always over 5 to 10 years, you know, you will make up if the markets are down now, they will come back up, and that's why, you know, we always say that when the markets are down, it's the best time to actually invest in the markets, because you're waiting for that peak. But yeah, it's always the long term. So, you know, if you look at stocks and shares in the equity market for a short period of time, it might not look great. But if you extend it and look at the longer term window, it will always, it will always produce positive returns in comparison to any other asset class. So long term is the way to go. I know we can be impatient at times, and we would just want make money really quickly. But that's that's really taking a high level of risk, and it's like, you know, you can probably compare it to putting money into anything really and just hoping it will make some money. But if you're looking strategically, then long term
is usually the best. So would I guess the safest or the most logical thing to do be not take such a risk and go for a long term, or can a long term investment still be quite risky?
No, I mean, it depends on what you put your money in the long term. Usually longer term investments, a lot of your money is put into, into the equity markets. Usually that's the way to go when you're looking at long term investments. But, you know, there's nothing to say that you can put a small amount into something different as an alternative investment, but as your main sort of long-term investment or something that you want to make some money out of, you have to look at it long-term, and usually it is the markets that will make the money for you. All the other things that come and go are just trends that, you know, that sound good for a short period of time, and some people make money and then a lot of people lose money, so it's kind of, you know, yeah.
Were you ever involved in like daily trading in like the stock market and so on? Do you have experience in that field at all?
Not really, you know, not really that, because they're sort of more sort of stockbrokers and all of that. So that's never, okay. No, I've been more sort of overall wealth management and portfolios and looking at all of that. So yeah, that's mainly my expertise.
Okay. Yeah. Now I was just curious because I know some people who are invested in the stock market, and they just sit at their computers and it's like daily, like all this like points that go up, and you know what I mean? And I'm like, it sounds like a big headache.
Yeah, no, that is a headache. And I have looked at it a few times in my life, but then looking at what was going on, I thought, no, actually, I'll stick to what I'm doing.
Sure. So you mentioned 15 years of experience in wealth management. Now, could you explain to all of us, what does wealth management mean? Because I personally don't know. So could you walk us through what that entails?
So wealth management to me, you know, it covers all aspects of your life. It actually is managing not only financial, but even your personal in a way. And I'll explain what I mean by that. If I'm managing your wealth, I need to know all about your circumstances. You know, are you married? Do you have children? Are you intending to marry? All these things, because if I'm putting something into place for you in terms of investments or anything really, I need to know what's happening with your life as well. So it's like a life plan when you're managing someone's wealth.
Okay.
I go as far as, you know, finding out more about the family, you know, parents, where are they, what are they doing, all of these things, because they all form part of your overall financial plan. And if you're managing someone's wealth properly, you really need to know a lot about them, family, career, what their intentions are, what else, even hobbies and things can make if you've got a very expensive hobby, for example, we need to factor that into when we're looking at your wealth. So it's things like that a lot of people don't realize, and they just think it's sitting with someone and just saying, right, well, I want to invest X thousands of dollars into something.
Yeah.
That's it. But it's not.
It sounds like you have to make a much deeper connection with like a person to manage it correctly.
Exactly. And then also these investments or whatever it is that you're advising on, the tax situation, for example, in the future, if they're moving to a country where, the tax, obviously here being in the UAE, we don't pay any tax, but, you need to factor in, well, will they be in the future? So there's a lot to consider managing someone's wealth, and tax is huge as part of a wealth management sort of process. It's lots of factors and for me, I look at it as a big plan, where you are now, and where you're ultimately going to be as well. It all fits together.
Yeah. And so if I'm a client, I came to you and I'm Sophia, I want you to create a wealth management plan for me. Do I need to have a specific goal I'm trying to reach and you create a plan to help me reach there? Or is it just you take a look at what I have and you advise me, I think this is the best way forward for you to, generate 2 or 3 times what you're making now?
Both.
Both. Okay.
So, yeah.
Okay.
You can have a goal, for example, I want to buy a property and this is what my goal is. Or no, this is what I have, but I want to make the most of it. So what can we do? Or we have 2 things going on at the same time, or many things. But yeah, it's both.
It's both. Okay. And what do you find typically is the biggest challenge with creating these kind of plans? Is it the person that you're dealing with and they're not very clear on what they want or should do? Or is it that there's just it's the number of factors that you have to take into consideration to create something, pretty solid?
No, usually, it's like almost like interviewing the person when they come to you for advice. So you find out lots of information, and then you devise something with them. I work with my clients a lot in terms of, I want to know, this is what I've planned for you. Does it make sense? And we kind of make adjustments. The other key factor when you're looking at someone's overall wealth is to make sure you're in touch with them a lot. So there's no point me producing a plan for you and then we don't speak for a long time, because so many things change, circumstances change, you might get a better job, you may not, you may lose a job, whatever it is, but that all affects your overall wealth plan. So I think the key is the after sort of keeping in touch and having regular contact, check-ins. Regular reviews, regular check-ins. Absolutely. Yeah. That's really important.
And so I know in your current company, you guys do wealth management, I believe, and financial planning too. Are those 2 things 2 completely different things, or does one is just financial planning is just the thing that plays into the whole wealth management thing?
It's kind of, together. It's not really 2 separate things.
Okay.
A financial plan is kind of the way I've said, where we kind of look at where you are, where you need to be, and all of that. Wealth management, we take into consideration all the factors as well when I talk about taxes and all of these things that can affect your financial plan. But wealth management kind of takes into account the full range. Be insurance as well, that all comes part of it. Insurance, pensions, all of these things, just covering everything.
So wealth management is more like coming to you for financial planning, coming to you for wealth management. This is just maybe a subset of and then the wealth management is a much bigger picture that you have to take into account everything.
Correct.
Okay, I understand. Yeah. Okay, that's cool. And I saw on LinkedIn you said that your mission is, and there's 2 parts to this, was to change the way financial advice is given. So what have you found what are the issues with the way it's been typically given, like in your experience and what you've seen, and to the majority of people, like a normal person like myself? And how do you do it differently, or what do you see? How do you like to convey your message differently?
Yeah, so I think this became really apparent when I moved out to the UAE. In the UK, in London, my role was very advisory. It was adding value, and I came across to the UAE, and it was almost like a sales role here, and it was literally having a very quick chat and then producing something for someone to sign, and let's get the money into a plan, without any consideration, without finding out much about the person. So when I say that, my mission is to change the way things are done, because I think our role whether you're a financial planner or whether you're a wealth manager, is to add as much value to a person as possible. So if someone comes to see me, even if I don't, invest any money for them, for example, I want them to feel like they've had some value by coming to see me. So I want to give them as much information as I can to help them, and somehow, better their situation by coming to see me. So giving them some tips and some ideas to do things. And that's all part of. So, for example, I had a client the other day, as part of their financial review, they had a big mortgage out here. Now, I don't deal with mortgages personally, but what I did advise them to do was to have a look at that mortgage again. It's been years since they set it up. Perhaps they can reduce the amount they're paying into that mortgage to help them in terms of, free up some more money for them. And that's part of their overall financial plan. I didn't have to look at all of that and the nitty gritty, but I do, because that's just the way I am. So that's my mission, is to kind of help people as much as possible, and give ideas and tips.
And just add, like you said, just add value to. And you think, is the biggest issue, do you think, is it that there's a lack of information out there for them, like for, the general population, or is it that there is a lot of information, but it's not being conveyed in a way that, normal people would understand what that means and how it does affect them?
So on the net there's plenty of information. You can Google that. But I think when it comes to finances, people like to speak to somebody, whether it's on the phone or personally face to face. And unfortunately, a lot of times in the UAE, when people try and ask someone for help, they don't really get great advice. People just want to see someone. Literally, they just want them to take something from them, buy a plan or take an investment or set up a savings plan. They don't want to give any more information because it's wasting their time or whatever it is. That's the way they see it. Because I don't know. That's the way it is. For me, I don't have that kind of. My way of doing things is very different. I enjoy talking to people, and. If I can give some information that'll be helpful, then I'm happy to do that, even if I don't get anything from it. And to be honest, the way I see it is, if you can help someone, somehow, as you say, it will come back. It doesn't matter. So. Yeah.
And you said that this became this kind of mission of yours became more prevalent when you came to the UAE. Was it so back in the UK? Was it a little bit different, how people would handle situations?
Yeah. So. In the UK, the regulation is high. It's tight regulation there. And you need to be qualified to a very high level to become a wealth manager or a financial planner. Those things at the moment in the UAE are not quite there, and that's probably why that there's different information being given out there. Let's put it that way. So.
Yeah. So there's I guess the standards are a little bit different. So someone here could be giving advice, but they don't probably have enough experience to be giving the right kind of advice.
Correct.
Okay, I got you. Do you have any, no names, but is there a story that you've heard that someone has just gotten some terrible advice, and what did they say?
Well, there's plenty of stories. There's plenty of stories. I mean, I hear all the time where people have been given. I think that the most common really are these regular savings plans where people are just putting money away for the long term, not being explained the real terms and conditions and charges and all of these kind of things behind these plans. And these things are all key when it comes to these plans. So. I've heard of, unfortunately, a lot of people have lost money on these sort of regular savings plans more than anything else. And what can you do? I
guess live and learn. For sure. Okay, that's interesting. So regular savings seems to be the most common problem that people are facing here. And you also said that you wanted it to be introduced at an early age, and thought that was very interesting because I was thinking about, it made me think about growing up and in both in school and in university. Okay, in university is a little bit different. If you entered like the financial field or you entered the economics field like we did, you'll have a bit of an understanding about, you know, financial like literacy and money and so on. But for other people who don't, you never really learn about that kind of stuff. So you get into the real world, you have a job, even if you're young, 22, 23, no matter what age you are, and you don't understand how kind of money works. So why do you think that was never been a priority for us growing up in, you know, and in our institutions that we've been through?
It's this is a problem that's you know, and I think I still believe it's there. It's something that we should be tackling at a young age, while we're in these institutions, while we're at school, college, whatever. It's just basics of learning to deal with debt as well, and not having debt. I think, you know, the era of credit cards came out where it was so easy to just buy things on your credit card and, you know, we'll deal with it later type of scenario.
Exactly, yeah.
Which has caused a lot of people, and especially young people as well, to get in huge amounts of debt. But to the contrary also, it, you know, just saving a small amount at a younger age, something affordable, you know, the earlier you start it, the better it is. And that amount then compounded over the years. And, you know, there's various examples where even if you know, the minimum amount per month into some sort of investment will yield you huge amounts in the future. So the sooner they start, or the sooner you start, the better it is. But no one really advises you on that when you're young.
Exactly.
And, you know, these two elements, I think, debt and just saving even a small amount, and everybody can do it pretty much. If you've got a job and you're young, you can afford to put a small amount away. And one of my I did a sort of a tip video. One of them was literally set something up that leaves your bank account every month without you actually seeing it, so it's automated. Done. And that way you won't even feel it's come in and go. It's literally just gone and it's building. But, you know, that over some years, that amount that's going into an investment will be, you know, it'll be huge, and it's so important. So yeah, one of my messages also, you know, is really trying to help get that message across into in front of, and getting in front of younger people as well, and explaining these things to them before it's too late.
Yeah, exactly. Yeah. I think you said it perfectly. Before it's too late. Like even myself, even though I studied that, I still wouldn't say I have the financial literacy that I would want, you know, moving forward. Like I'm 30 now, so, and given everything that's happened, so let's say for me and for people who are like my age right now, you're 30 years old, you're single, and you maybe get married in the next few years, whatever. How should we start thinking about like our investing our money? Because on the example that you said, that you have something that can be taken out every month, but you were saying is that to stay in your bank account, or you're taking it out to go towards some type of investment? Because there was a guy I follow called Grant Cardone, and he always talks about, you know, making your money work for you. That's how you grow your wealth. That's how you have to do it. Leaving it sitting in a bank is kind of like, it's dead. You're losing, like it's, if anything, you're losing, not gaining. So what do you think about that? Is that what people have to start doing? Start becoming more, I guess, willing to make those investments?
Yeah, absolutely. And that's a point. So leaving it in your bank, interest rates are low, and inflation, you know, it eats up. It's like eroding your money year by year. So the more you leave in your bank account over the years, you're actually losing money by leaving it in your bank. So yeah, the concept of making your money work harder for you, or you know, that is a concept, and that's what, you know, that's what we mean by investing into something that's going to work with you, you know, grow your money.
Exactly, yeah.
And then as your situations increase, then you can sort of, you know, have some real estate as part of your, you know, that's going to work for you, have other things. But yeah, definitely as point one is to put your money into an investment that's growing your money, not leaving it in the bank. And even if it's a small amount to start with, do that, and get going. I think the sooner people make the, you know, the move to put their money into something that will grow it, the better it is, really, to be honest.
Then I guess the next question becomes, so let's say now I know that I need to invest my money into something. That would be the smart move to do to start growing my wealth.
Yeah.
the question then becomes for like someone like me or someone who has no idea about like investments. Where do I start? What should I invest? You know, even not in, and even let's say the low risk, whatever it might be. If I don't like, even myself, I'm like, I wouldn't know where to start. I'm like, okay, I want to invest, but I'm like, okay, where? I don't know what to do. Yeah. What advice would you have for that?
Yeah. So for that, for the first, to start off, I would go for one of these, like a portfolio which is managed for you. So, even if you start quite low risk, which is, high in bonds and things, when you're looking at asset classes, and some in equities within the portfolio, start with that, because that will basically give you an understanding of how investments are working, it's growing, and all of that kind of stuff. And then, as I say, as your experience increases and then your wealth increases, it's all adaptable, and then you'll start to look at different things. But as a good way to make a start would be, just put some money into like an investment portfolio. These are usually set up by financial advisors or
Yeah, exactly.
That's who you would need to see. Some banks as well, but yeah.
But probably, like you said, so I guess the best advice is to start reaching out to potential financial planners and so on, and start putting together some kind of portfolio to start, growing your money. And you mentioned experience a couple of times. What do you mean by experience? Is that just experience in working, or is that experience in investing?
In investing.
Okay.
Yeah.
Okay.
Yeah. I think it's quite important, because if you're not sure, if you've never done it before, there is no point you going into a really high risk or a new fad investment that's just come into the market just because it sounds nice or someone else has invested in it. You just kind of have to be a bit more strategic, I think. So that's why once you've tried and you've invested, then you're kind of experienced, then your experience levels are a bit higher, you understand how they work, and then you can look at other options. But that's what I mean by that. Okay,
so just learning how, I guess, just first off, just learning how to invest. What does that look like in the lowest risk way possible, and then just building and, like you said, adapting as you go along.
Correct.
Yeah, I think that's some good advice. I'm gonna might reach out to you after this.
Sure.
So you've been working in this field for about 15 years. What's the biggest lesson that you've learned during your time working in this field? Because I think during that time, there's a lot of things have changed in the field. There's been a big evolution. So how has the field evolved during your time, and what would you say the biggest lesson that you've taken away from?
Yeah, so it has been a long time, which I don't know if I want to admit, but and I have seen lots of ups and downs in many things, whether it's economies, markets, countries. I think my biggest takeaway from all of that is how important it is to have a good financial plan in place, to kind of something that is, it's hard to say, but that can help you in situations. And if you have a good plan that's distributed well, so you're balancing your assets in different asset classes as well. If your overall plan has some property in it, for example, some shares in it, if markets are doing badly, and your shares are really low at a point in time, at least you might have something else in your overall wealth portfolio that's doing well. So you're balancing yourself out.
Yeah.
I think that's been quite key to have. And normally it doesn't matter how how intellectual you are, or but you need someone to sit and advise and look at your situation. You need someone else to look at it for you. I think that's a big takeaway from my experience as well. So, when you're looking at it yourself, you're like, yeah, okay, I've got some money there and I'll do this and I'll do that. And you just talk to yourself and you think it's fine. When you've got somebody else looking at it, questioning you, and what if this happens and what if this, it's different. So, it is really important to have things in place, and also really, looking at situations in case things go wrong, and things happen, and life happens. So have you protected your assets and your wealth for that, or
Yeah.
have you thought about that as well? The last thing you want to do is something happen and you haven't really planned for it. I know you can't plan for everything, but you can kind of look at situations and kind of try and sort of plan for certain things that could happen in one's life. So yeah.
So having a financial plan, number one, to offset against any disasters that might happen, like for example what happened this year. And having a third party, like someone outside, to sit down, advise you, and to give you a different perspective on what you're doing. Because I think sometimes with investment, if I'm not mistaken from what I've read, is a lot of the times it can be very emotional, not logical, and that might be where the mistakes are made. Would you agree with that?
Yes.
Yeah.
It is very emotional as well. Agreed.
So having the outside perspective is what allows you to kind of remove that emotion, and someone can take a look at it for you and really understand that.
Yeah.
And given everything that's happened this year, as we said, like having a financial plan is probably, well, it should be, if anything, now top of mind for everyone, like moving forward, because I don't know about, companies is a different thing, but individuals might not necessarily. I think a lot of people, I could be wrong, but I don't think so, I probably didn't have a financial plan in place, myself included. So what advice would you have for people now about investing? Because given everything that's happened, jobs have been lost, everyone's trying to companies are firing people, you know what I mean, getting let go. So each dollar, each dirham, whatever, is becoming that much more like valuable, and you're going to think another maybe 20 times before you invest, that kind of thing. So what advice would you have for people now, given, let's say, they've been affected negatively? How do you bounce back, and now how do you start looking forward?
Yeah. I think the first thing to do is start building up a bit of what I call is like a bit of an emergency fund as well.
Okay.
So if you've unfortunately been in a situation where you've lost your job, or you've not been paid for X number of months, which is quite common as well, instead of just jumping into, right, so I need to invest some money, which you do, I think the first point would be build up a bit of an emergency contingency fund for yourself, just in case, so that you can cover your costs and living costs, really.
Yeah.
Once you've built that, then definitely you still need to start looking at. I know it's hard when you've had a bit of a bad year and all of that.
Yeah, exactly. Yeah.
But I think if you look at it overall, it will benefit you and your families if you do look at your investment plans again. And as I say, if even if it means starting small, but start again and start building. For sure. What else would I say? Now, it has been. I mean, nobody would have expected what's happened this year.
Yeah, I don't think anyone could have predicted that.
It's completely thrown many people. But I think it is a matter of learning from it and just thinking about, right, so if it happened again, well, God forbid it happens again, but
I don't think we can do another one.
How would I have done things differently? And if your finances were not on point, start now. Start thinking, okay, well, now I've learned from that. Let me start to build my future. And even if it means starting from scratch,
you might have, a lot of people might have to. Yeah.
In some cases I've heard, I know that all their savings have been diminished because of all of this that's happened. And it's unfortunate, but you just kind of have to pick up from there and say, okay, now let's look forward, let's be positive, and let's start again. It can be done. It can be done.
And like you said, so the two things would be, or the two main things is, start putting together some type of emergency fund. And with that, like, let's say you've lost your job, you have, bills, all that kind of stuff. So would the smart thing to do, I guess, then downsize to create, some kind of gap, kind of gap for yourself, so you have a bit, and then you start the second part of the process.
Correct. Yeah. So I think another good thing to do is really looking at your budget, your outgoings, everything really that you spend on. You really need to have that exercise where you need to sit down and go through everything. And there's always ways that you can reduce your outgoings without, if you don't sit down and look at it, you won't know, and you forget things.
Yeah, no, true. Of course.
You forget whatever you're paying for, whatever, and things just leave your bank account. It's so important to have a look at it properly again and say, well, what's that? So that's a really important exercise to do. And you're right, depending on your situation, look again at your rent, look again at your cars and things like that. Can you look at renegotiating some of these things if it will free up some more money? Mortgages, rent, whatever it is that you're doing, it can help.
Yeah.
But yeah, really looking at your outgoings, and then, obviously if your income's reduced, and you need to make sure it's balancing out.
Exactly.
And you talked about that gap. That's true. Then we need to start looking at, once you have a surplus of income, then start doing number one and then number two.
Number two.
But if you're in a situation, no, don't go straight into start trying to put money. You can't physically. So yeah, start doing the exercise in terms of looking at your outgoings and trying to work things out from there.
Yeah, for sure. No, I think that's really, really good advice. And so given this year, given everything that's happened, I'm guessing your clients have been going, crazy with everything that's happened. So what has been the common, I guess, issue that kind of spreads across most of them? Is it, of course, like business not doing well, given, fine, but are there other things that maybe other people are not aware of that we are like about businesses that we're not taking into consideration?
I'm trying to think of a common. No, so I mean the main thing, which is probably a lot of clients and a lot of people I know have had to pivot their business in terms of change the way they've conducted their business, from whether it's gone from face to face to online. That's been a major thing, and in some cases I've heard of people that who've had to completely change what they've been doing. So like literally they've been running their business for years, but the pandemic has just completely, they've lost everything in terms of they have zero clients, because there's some industries that are luxury, for example. People just will not spend on these items or whatever unless they have to.
Of course.
So, I think a lot of people they've retrained in some cases as well. They've changed their career. I've heard of so many stories. Obviously, the ones that have been forced to change because of, obviously the main sort of industries were sort of travel, F&B. These industries were hit hard.
Yeah, for sure.
During this sort of whole period of time. But it seems as though slowly that there has been some movement. So, that will pick up. But yeah, many businesses have changed. I've heard a lot about companies have really gone into smaller commercial premises now. They don't need the big offices.
True. Yeah.
So that's a huge, that's huge in terms of the whole economy, really. So people are just opting for very small offices and allowing people to work from home and have very small presence in actual offices. So this has changed the way we're doing business, really.
Yeah.
And yeah, I've heard the contrary in some countries. I know in the US there's a trend where people are moving into larger properties, as in residential properties, because they're working from home and they want bigger spaces to work from. So they've gone from small congested apartments to larger houses on the outskirts of cities, just because, so there's different trends in different countries, and yeah, it's lots of things going on that's changed the way we're doing business and everything, really, the way we're living.
Yeah, exactly. Masks everywhere and like all that kind of stuff. But that's so interesting that in the States people are getting bigger places now. I would have never thought that anyone's getting bigger anything at the moment.
That's what I thought, and then I saw this. I had a conversation with someone there, and I read a report, and it was true.
Wow.
It's happening. So there you go.
That's very interesting. And on the part that you said about how businesses have had to pivot and shift to online, and like you said, a lot of them now are renting out smaller spaces because people are working from home. So do you think now, given everything that's happened, because this is what I think. So before the pandemic, especially here, particularly here, because when I was working in Amsterdam, working from home, we used to be in one of my companies, we were allowed to work home 1 day a week, and it was like a given, and it was fine, and no one said anything. But I feel over here particularly, it's a very cultural thing. Like if you're not in the office, I don't think you're working. And everything now, it's been in COVID for 8 months now, something like that.
Yeah.
So, and this has proven that you can. Okay, the world has still run on. It was okay if your business was affected. I'm sure it was, but work is still being done, and people are working from home. So now, do you think moving forward there is a need for an office? I think there are benefits. I'm not saying there's no benefits to it. There are. But is there really a need now in 2020 for anyone to have an office?
Probably not.
Yes.
Probably
you
not.
agree, yes.
Yeah, but you're right. And I don't know whether it is a cultural thing in this part of the world, but I still feel that there's people that are going out and working in their office. Or it's very strange. But I don't think we're going to get 100% working from home and no office. We may get smaller offices. But no, I agree with you. I don't think that really there is a need. But yeah.
Yeah. But it's all about, like, I know the argument people say is typically is like, oh, you need that human connection, you need the interaction. Listen, I'm not saying if you're all together in an office, you might be able to get things done quicker. Fair, because you can just talk to the person right there. I don't have to like Zoom you or like message you, and you might be doing, God knows what you're doing. But now is like, it's just proven everything. And this is the thing that bothers me, is that I still hear about, like, a lot of my friends, whatever, that they're back in the office because their bosses or whatever, they're like, you just need to be in the office. It's just, there's no logic behind it. It's just, this is something that I want, and now because you're employed at this company, you have to follow. And that frustrates me a lot. It's very, very frustrating, because I'm like, there's no need. Honestly, there's no need.
Yeah. Well, I think we're not going to get, fully get out of this whole, you're right.
Yeah.
We're not.
I think it's wishful thinking.
Yeah.
Yeah. And so moving forward now, given everything that's happened with like this year, do you think now need to start like thinking about how they're going to work differently? Because like you said, a lot of them have had to pivot. So now moving forward, do you think there needs to be like there might be more of an emphasis on remote workers? Might that be a bigger thing? Like, you can have people like all over the world working for the company, or does the model have to change now on how we like do business, do you think?
Yeah, and I think it has changed overall. It definitely has. We've seen it here locally. Where they've made the shift in terms of allowing the visas for people to come and work from abroad here, and so that's a shift in mindset. But yeah, I mean, it does create more opportunity to be able to work anywhere around the world. This is like, it's opened up the world to everyone now. Everybody knew it could be done, but nobody was really doing it.
Exactly.
So,
you said it perfectly. Yeah.
We all knew, in the back of our mind, but this whole year has forced us to kind of get on with it and do it. And even the people who are not tech savvy have got onto the Zoom and team meetings and whatever, and they've been on it because there's no other way.
Exactly.
So circumstances have forced people to change. And I think, I believe it has changed the whole business model now for many people. And, going into 2021 as well, I would imagine a lot of businesses have changed their plans for next year based on everything. And they, whether they like it or not, they've had to put in a lot of remote working type scenarios.
Exactly, yeah.
Because it's the way forward. And, to improve efficiency, you have to do it. You can't sit and think, well, we'll wait for everyone to come back in. It's not going to happen. So you have to make the most of where you are, and I think businesses have taken that on board. Yeah. On the whole. Yeah.
You kind of have to adapt with how everything's changing, and like you said, there probably maybe some companies and some places in the world will have fully like remote working, but I think, like you said, I think the hybrid model is what is going to be the new norm. Yeah. Maybe 3 days at home, maybe you're in the office twice, or whatever that might be, whatever that might look like. Coming back to just on the investment part for a moment, what are the mistakes that you think or that you see people typically make with investments? Do you understand what I mean? Because I think, given your experience, like there must be some common mistakes that a lot of people are doing. Either they're aware of it or they're just uninformed about what they're doing. So what do you think? What do you see have been to be the common mistakes that people make?
Right. So for this part of the world, let's talk about the UAE and the, you know, the way advice is given here. I think one of the most common is people not really taking into account, you know, where they're going from the UAE. So it's quite, you know, people, not all the, you know, not always stay here for a long period of time.
Yeah.
So some people are here for a short period of time. Some people go back to their home country. Some people move on to other countries. Some of the plans that they've decided to invest in means that they're paying a lot of money into an investment, which if they stop paying or reduce the amount, has a detrimental effect on their plan. And they haven't thought about that. So that's a common mistake around here. So, you know, for example, if you're earning higher than you would do in your home country working in the UAE, you know, you're then paying a high amount into a plan, not taking into account the consideration that in a couple of years you might be going back to your home country, and therefore you know your income's going to go down a lot. You can't afford to keep paying into that plan, so they're then losing a lot of money. So that's a massive, you know, a massive problem that I've seen. So it's so important to take that into consideration. What else? So it's hard to comment on different, but I think, you know, property can be a funny one, because actually, you know, the benefits of property at the moment is obviously the prices are pretty low.
Yeah.
You know, that's great. However, you know, the disadvantages obviously are that the supply is massive. You know, there's lots of property out there. So if you need to sell, you're going to be selling, you know, you're not going to be selling at a premium. And also your money is then illiquid. It's in a property. You have to sell the property if if you've put your money into something. So that's one aspect that a lot of people don't consider well enough in some circumstances. Let's put it that way. So, you know, that's something to consider. You know, if you're putting all the money that you have into property, then if you need some money fast, you're not going to get it fast. Because you have to sell the whole thing. You can't just sell a bit of it and say I need a few $1,000s. You've got to sell the whole thing. So that's another thing to look into. What else would I say is, I guess and probably my final point is really these sort of fad investments that come along that you know, offer really high, fantastic returns. And they kind of fizzle out, and people end up losing a lot of money. I'm not going to mention those a few, but you know, they come out. Oh, these are fantastic investments. No one's heard of them, and then some people make some money, a lot of money on them, or some money. So just that's another big problem over here as well. Just to be careful in terms of what you're investing in, and I always say, if it sounds too good to be true, it is. Yeah. It is true. You know.
That I was gonna, in my head, I'm like, that was the phrase that was going on in my head. Like, if someone's over promising something that you're like, you have that gut instinct that tells you like, I don't know about that. It sounds great, but there's probably a lot behind the curtain that you're not aware of. But I think the two things you mentioned were really interesting, that about people that, you know, since Dubai is a very like transient kind of place, people come for a few years and they leave, and I never considered that whole investment side. Like, if you go back to your country, you might paying less, and that's why, and then you get, you know, stuck with what you've been investing in over here, and that starts having a negative effect. I never knew that. And also, I think it was a great point about the real estate, is because I didn't even think about that, to be honest. I was like, oh yeah, it's a great time to buy right now, because it is a great time to buy because the prices are low. But I never considered that second part, which is, now my money's in that. If there's a chance that this will depreciate, so even when I do sell it, number one, it's going to be hard to sell, and two, I'm going to lose when I sell it. Mm-hmm. So let's say now, would you recommend someone to buy a property, or would you be like, I don't know, maybe hold off a little bit? What would you say?
God, so this is a tough one, and I have a lot of friends in real estate who want to kill me at this point.
This is your opinion, not against you guys. It's just her opinion.
Look, I think with property, wherever it is in the world and whatever the supply is doing, I think, if you have money available, other money as well. So then go for it and have it as part of your overall sort of asset, overall portfolio. But if that's the only money that you've been saving and that's all you've got, I think it's maybe not the best time, especially now here in the UAE, to buy a property, because the points that we mentioned earlier, if you need access to more, if you've got you've got some funds available for emergencies and you've got some plans and investment that you're quite comfortable that's there, and then you're building up more money to put into property, then yes, I have no issues with that. But if you're putting everything that you've got into property here right now, maybe not the best thing to be doing, especially now. I think it's difficult because it sounds attractive with the prices. It does, at the moment.
Even I thought I'm like, yeah, that sounds great, but then after this conversation I'm like, okay, maybe it's not the best time. But I think, and something that you said that I've taken from our conversation today about when it comes to the portfolio is having multiple streams of income. Like you said, don't have a diverse portfolio, different asset classes and so on, because like you said, if one thing goes down, you might have something else to hedge against it, right?
Correct.
Yeah.
Exactly. As summarized brilliantly there. But it's true. So again, if we look at the property example, if you've bought property, your property prices are low or your rent's low, is yielding a low return, at least you have something else as part that's balancing it out. And then when property prices go up or rent goes up, it's all going to fall into place. But diversification is key. It really is. It's not just a saying, it actually does work. Yeah,
don't put all your eggs in one basket, as they say. Exactly. I wanted to come on to I know you're part of two communities, and you run one thing for yourself for women as well. So I want to start with the Smart Fortune community. So why don't you tell all of us, what is that about, and how did that come to be?
Yeah, so Smart Fortune is it's a community I've put together. It's a Facebook community, but it is really a platform for me to give out as much help and tips as I can to people. It is free. I have got videos on there where I try and explain about, various things. And these are normally common questions that come my way anyway.
Yeah, I'm sure.
So for me to just do a quick video and address that is perfect. And there's probably other people out there, is what my thought process was, that were thinking the same thing, but maybe they don't know who to speak to, or,
True.
If you've got one question or two, you don't want to call up a financial advisor or somebody just to ask that. So that's what I want to do with that, and I just want to put out as much information as I can. I'm still building on it. I'm gonna, have more, interviews with other people in the industry as well, so we can keep up to date and all that kind of stuff. So it's I started it a couple of months ago, but I'm building on it. But it's, for me, that's my way of kind of giving back as much as I can. To everyone, really, and it's doing well. I've got some really great feedback from it as well. So
that's fantastic. Awesome. That's awesome. I love the vision behind that. You're just giving, helping people out with just, some free advice that probably a lot of people are thinking about. I'm curious, which video, if you know off the top of your head, had the most engagement? What was the question or what was the tip that you gave that everyone's like, yes, that one? Or was it that question? That was a question that a lot of us have been thinking about.
I'm trying to think now. What was it? It actually could be the one where I talked about diversification. Actually.
Oh, really?
I think that was the one that comes straight to mind.
Yeah.
Where I did speak about diversifying and not putting all your eggs in one basket, and really trying to hedge against different asset classes. I think that was the one that got.
That was the one. Okay, so I'm guessing a lot of people. It sounds of it, not many people have multiple streams of income. You have either your job or your company, and that's it.
Yeah.
So how do you, I guess, is investing the best way to start creating some a new form of revenue stream for you? Like you have your job, you said you're putting that money aside and you're investing it in something. Is that the easiest way to start creating a new revenue stream for yourself? Or what advice would you have to people to start thinking about how to start creating those new streams?
So yeah, I mean, wealth creation can come in many forms. Obviously, the one that I specialize is in our investments and things that will create income in the future for you as well. But I think as you start to build your wealth, you will start to look at different opportunities. So, for example, you might look at other business opportunities as well, which do form hand in hand with investments as well. But if you're putting money away, growing it, you need to have different pots. So one, you might use the amount of money that you've invested to put into a business, another opportunity again. Okay. So we're then reinvesting it. You may use the investment money to buy property in the future when things are different, for example, because again, so you're kind of reinvesting parts of the money that you're putting away. Usually you have one that's really long term that will just keep on growing, which is your sort of backup for the future type of investment. So that you kind of keep going. But the others, you're kind of looking for opportunities to really maximize growth. Be it investments, be it, there's lots of ways, whether it's business opportunities, whether it's, it can be property. So I'm not saying totally negative about property, but it can be when the time's right to invest in something like that that's going to produce some level of income. Yeah.
So it's kind of like, it all sounds kind of like a cycle. You start one thing, you grow some money here, you take that, you invest it somewhere else, it starts generating money, and then it just, keeps doing it. I think what I've taken from it is you have to find ways to be creative with your money. How think of new ways that you could use it, think of new ways you could invest it, like you said, in businesses, have something long term that will just like keep going, and maybe you can take a little bit of more of a risk with like something on the side. Yeah. Okay, no, that makes sense. By the way, I'm learning so much today, so this is awesome for me. I hope other people are too. And you also have another community that you're a part of, which is the BNI community, right? And it was interesting. It says it's centered around the giver's gain philosophy. Now, I read about that, but I don't think I fully understood what that meant. So why don't you tell all of us, what is that community? How has your experience been with it so far?
Yeah, so BNI is something that has been part of my, life since I set up my own company in the UK. So I was part of BNI in the UK and then BNI in the UAE. So essentially it's a group of business owners, usually senior professionals who meet weekly. And the giver's gain philosophy really means you're out there to help everyone else that's part of your, we call it a chapter, but your group.
Okay.
And your mentality, the way it works is your mentality shouldn't be to, just to take from people. So you're not just there to take business or referrals from people, you give first. So, and it works, the more you give and help others in your group, the more that will come back to you. And sometimes it doesn't come back to you straight away. It takes a bit of time, but it will.
Yeah.
So for me, that's worked really well. I really enjoy BNI. I meet great people, and I've built quite a large, strong network through BNI, which has been good. And my mentality with that is just try and help as many people as I can, get as many referrals to people, and then it will happen. It's sort of reciprocal, really, in a way. So that's one of my little side sort of networking things that I'm part of.
Yeah, but I think that's a great community to be a part of. If that's this like the focus of it, and given your experience, it sounds like it's been a positive one, so that's a good thing. But what I've learned also in my experience with the podcast is like the importance of building your network. Like the people I've connected to in these last like 8 months, I've gone from like nothing to like, wow, I'm like, okay, now I know people. I've built a network, and I think what I've learned is moving forward in business and whatever, that is such an important part for you to like either take yourself to the next step or open up new doors, and it sounds like you've had a similar experience with that too.
Yeah, no, definitely. And I think with these networks that you build or you're part of, you just need to give as much as you can and help people and as I say, they'll help you in return as well.
Yeah.
Definitely. So like BNI is one, also part of Ascentive, which is another networking community that I'm part of, which is, again, it's great, it's strong, and yeah, we help each other out there a lot as well. So yeah, I've got quite a few.
Lots of networking groups.
Yeah.
Does it take? Can it be overwhelming sometimes to be part of so many groups and to be like so active in those groups? I can imagine it can be quite draining at times.
Yeah, it's pretty hard work.
Yeah, exactly. Yeah.
Because you want to do it right and you want to do it correctly if you're like me. But I think the key to it is identifying the ones that work for you and your business, because there's so many out there, and if you try and be part of all of them, it's probably too much. But if you identify the one or two that work for you and then put the effort in, you'll reap the rewards.
You'll reap the rewards. Yeah. I think that makes perfect sense. Like you said, there's probably a lot of communities and networks out there nowadays. So being targeted with the ones that you think work best for you is probably the right move going forward.
Yeah.
Sophia, first of all, I wanted to say thank you so much for coming on the show today. This has been amazing. I've learned so much from you. You have no idea. And I think a lot of people who either didn't know much about investments or are thinking about what they should be doing now and looking forward, I think they can take a lot from this episode. So thank you so much. For my last question that I ask all my guests is, what is the message that you'd like all of us to take home today?
It is to stay positive, be positive, and if it's been a bad year for you, just erase it and let's start from now. I think we need to just stay positive and optimistic, and make the most of what we've got. We've got a lot of good things going for us. Everyone has, and just focus on those. And try and stay happy.
Try and stay happy. I think being positive is great advice. I know it can be challenging sometimes, of course, but look for the good things that are happening and not just focus on the bad things that have happened to you as well. I think
Absolutely.
That's what it's
Yeah.
100% agree. Sophia, this has been an absolute pleasure. Thank you so much. I really appreciate your time and coming on the show. This has been a great conversation. Guys, to everyone listening, thank you for your time. Appreciate it. And as always, hope it helps. Peace.